What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Now, today's video is coming out a little bit later than usual. I had some obligations I had to take care of this morning, but there was absolutely no way I could not make today's video. So we're going to talk about something interesting right now. Having a look at what happened, we have essentially gotten double barded, except this time we couldn't even get as high as the previous. You see right here, we went up, dumped straight down. Same thing right here. We didn't even get up to this level, dump back down again, and now we are trading in the same exact range that Bitcoin has been stuck in for weeks. However, my friends, recent data actually suggests why the Bitcoin price is being suppressed, why every time we come up here, we keep getting pushed back down and we can't seem to break above these resistances. Now, knowing this new data, this does awaken me essentially to start looking at one of these indicators that we have been looking at for quite a time on the channel. And if you've been following, you'll understand the significance of why we need to be paying attention to this specifically. And I am going to show you this, so you definitely want to stick around for that. We also do have this bill that came out from Senator Lummis. She announced the crypto bill, and we're going to go over some of the key points of this and what it means. And I'm also going to play the clip for you if you want to watch the official announcement this morning over on Squawk Box. So we are going to talk about all that today, guys. Definitely stick around to the end of this video. We have a lot to go over. In fact, one of the things is, why is the Fed pricing eggs in Bitcoin? Yeah, that's a thing right now. So if you are glad that I decided to make a video today because we're going to go over this, slap a like on the video, get subscribed, because you guys know I cannot leave you hanging. And without further ado, let's dive into the charts. So as we can see here, yes, we did get double barded. If I actually switch this over to the daily, however, though, you will honestly notice that this was the area. I mean, look at this right here, right? We had this green candle close. We had this sort of, no man's land sort of, what do they call it? Double-sided lightsaber wick, right? And then boom, we dump down. And look at this, guys. If we actually zoom in right here, you can see exactly perfectly touch resistance and pulled back. So what we are doing is we are in fact still on the uptrend. So that is a good thing to point out. You can see every single time we're putting in higher lows, higher lows, higher lows, but we're also starting to put in lower highs as well. So there is another type of consolidation forming right now. You can see right here, we have the ultimate apex, and that is around June 19th. So I would say that we probably are not going to be able to continue going sideways longer than June 19th. And you will notice that we are still in this falling wedge pattern, and surprisingly or not surprisingly, we were once again held down by this area, right? So in yesterday's video, we did talk about a potential reversal signal. However, there is some news that has recently been shed to the light, or has had the light shed on it, right? Now, in all fairness, yesterday was a strange day for stocks, really confusing day. We had a crazy pump and then a dump, and then it kind of ended neutral, but it still closed a red candle. Today, stocks are still attempting to break up into the resistance, not successfully doing that. However, we do notice that the dollar has been, kind of moving upwards a little bit, right? So we know when the DXY starts to show some strength, that's when we see, things like Bitcoin and commodities start to go the other way. However, I am going to point out that I still am anticipating that the dollar at least comes down to this 100 level before attempting another run to the upside. We will have to see what happens. The CPI report is coming out on the 10th, right? So that's going to affect markets as well. If inflation is lower, that's good. We might see a rally. If it's higher, that's not going to be good. And if it's neutral, well, I mean, last time we saw what happened. It pumped into the day and then dumped the next day anyway, right? So really what we're looking for is inflation data that is going to be lower than 8%. And make sure you get subscribed to the channel. We are going to be going over that live as it's happening, but that is something that we do need to pay attention to. And in yesterday's video, I was showing you that how Rect Capital had pointed out that we did not get into this RSI level where we had seen previously, right? And usually that did signal the bottom, and we also have never touched the 200 weekly, right? But there's a lot of TA we can go over. Just watch the previous videos. We're still just stuck in the range. There's not too much to say. Interestingly enough, though, we did call this. Look at the Bitcoin dominance. It did attempt to hit this resistance, and it did have a little pullback. Now, this is the smaller resistance, not as important. We could see a little rally in the altcoins, maybe in the coming weeks. But really, this key level up here, this red line, that's where we're looking at, right around 53% Bitcoin dominance. And it does look like the Bitfinex longs may have started to kind of top out. So I don't know if we should take this as a bearish signal. They haven't officially started closing all of their longs, but it is starting to top out a bit. So I think at this point, they're starting to tread a bit cautiously. So what is causing this dump? Why is it happening? Well, there was actually a report that came out over here. Bloomberg published it, and what they found is that Bitcoin miners may actually be the culprits selling coins. So the actual miners that, are mining Bitcoin are potentially selling, and they've even recently found out that it could be new miners specifically, people who just recently jumped into Bitcoin. They saw the price was going up, they spent millions of dollars on miners, only to have the price fall 55%, and now they're finding themselves underwater, or they simply want to cover costs in the event of a black swan situation where Bitcoin does go to these crazy low levels. So you can actually see right here, and there is a chart at the bottom to show you this, but miners transferred about 195,600 Bitcoin to exchanges in May. This is the biggest monthly increase since January. And if you do an average price of around 32,000, that's about $6.3 billion transferred to the exchanges. Now, this doesn't mean that they are selling, but let's be honest, if they're sending it to the exchange, what do you think they're doing, right? I mean, I'm sure these guys know how to hold their crypto in cold storage. And, I'll get into the rest of the article, but you could see right here, look at this incredible, incredible spike. You can see back here, we had this, and then look, very low, and then boom, it just absolutely skyrockets, 17.2K right here specifically. And this was on the 13th. So, even though they had done this previously, maybe they did start selling, as we got those little pumps, that's why we got those BARTs potentially, because they were getting excited about the price and they wanted to make sure that they were able to sell it at a decent price. So if we actually continue to read into this a little bit more, it says sellers include publicly traded miners such as Riot Blockchain Incorporated. And they actually did find this by metrics compiled by Compass Mining. So it's not like they're just pulling this data out of thin air. This is something that they are monitoring. And you had Will Foxley, director of content over at Compass Mining, saying, I think miners are just talking about the macro event and think it's probably prudent to sell Bitcoin in these levels in order to keep operations safe. Miners are also trying to pay for mining machines they ordered months ago while putting down non-refundable deposits in millions of dollars. A wave of small miners that came in during the bull cycle and bet big on Bitcoin price rising are now at risk of needing to liquidate their mined coins, according to Matthew Schultz, executive chairman of CleanSpark. And on top of that, shares of public miners have been hit hard this year. For example, Riot is down 72%, while Marathon Digital Holdings Incorporated has slumped a similar amount. So on top of the fact that you had a lot of new miners coming in, they, were thinking Bitcoin was going to go to 100K, like everybody laser eyes, we know what was going on, right? And now we're sitting down at 29,000, 30,000. So every time we're getting these pumps right here, right? They're taking advantage of that and they're selling. That's essentially what they're doing, or at least that's what we can infer from this data. But here is what I'm talking about. So now that we know this, now that we actually have the data that can show that the miners are selling, what we should be paying attention to is our good old buddy, the hash ribbon indicator. Now, this indicator shows us when miners start to truly capitulate. So essentially, you could see we have these two, averages right here. And whenever they cross to the downside, that's essentially when you get these buy signals. Actually, you get it once it comes back up, but it has this capitulation right here. You see, it's kind of hard to see, but there's this gray dot right here. And that's exactly when we start to go to the downside. So for an example, we actually had minor capitulation start to happen here, which actually would have been a really good indicator had we been looking at it at the time. Hindsight being 2020, right? But around 57,000 back here in April of 2021, you notice that we started to get that capitulation, right? And that doesn't mean it's a buy signal. What that means is usually there is a little more selling after that. And then once the moving averages cross back to the upside, you guys can see it crosses back up. Then we go back into the green, and then that's when you get the buy signal. Now, just keep in mind that this buy signal is not a perfect signal. Like, keep in mind, this buy signal came here during this candle when Bitcoin had reached a high of 43,000. However, Bitcoin was all the way down at 29,000 while they were still capitulating. So this is not really a signal for the absolute bottom for buying. I just want you guys to keep that in mind. But what it is a signal that miners have capitulated and the trend is reversing. And you can see right here, once we did get that signal, if you wanted to long or you wanted to buy Bitcoin, technically, no, you didn't get the bottom. But even if you bought at 43, Bitcoin still went up to almost $70,000. So it is a good indicator. And if I zoom in right now, as close as I could possibly get, you guys could see right here that we haven't actually had the lines cross over yet, but they're getting very close. I mean, they're almost running parallel to each other right now. So this is something to keep our eyes on, and we could enter into the minor capitulation stage. Now, if we do enter into the minor capitulation stage, that could take the price of Bitcoin short term a little bit lower. However, remember that we do have this moving average, this 200 weekly, and that is sitting currently at around, I think it's 22,000 something. I don't know if I have it pulled up here somewhere, but ultimately that moving average is going to continue to rise over time. So there is that possibility that we do get that capitulation from the miners, which I do believe would be the true capitulation that everyone is waiting for, because if the miners are capitulating, the guys that are mining Bitcoin, that's pretty bad. We're not talking about just retail who just came in, in the past year or so. We're talking about miners that are, putting their money where their mouth is with the machines. So that's just something that I wanted to point out. So we are going to keep our eyes very close on this and, like I said, guys, make sure you get subscribed, because as soon as we see these cross, I am going to put out an alert. You can, check me out over on Twitter at the Crypto Zombie, go in the Telegram group. And I really think at that point, we could be looking for a little bit more downside. But then once we get the buy, it's usually a good signal. Now, I just want to point out that not every single time we get the capitulation, it doesn't necessarily mean that we are going to go down lower. I mean, for example, we had it back here and the price did continue to go up. However, regardless, no matter how you look at it, we got the buy signal right around 18,000. Bitcoin went up to 64,000. So really, it's the buy signal after the capitulation. In the middle, anything can kind of happen. Usually it tends to go down, and this is a situation in which it didn't. But the buy signal, nevertheless, definitely showed that if you did buy at that point, Bitcoin was looking to go up, right? For the most part, every single time, right? Bitcoin went up, Bitcoin went up, Bitcoin went up here, but then we did have the COVID crash. But even so, if you still bought, Bitcoin went from 7,000 to 10,000 before it crashed. So it's still held true that the price went up. So we haven't had one in quite a long time. That is what we're looking for. We're waiting for that full-on capitulation, and then we want to see these averages starting to move the other way. So you can kind of guess sort of when it's going to happen. You can kind of figure it out. But ultimately, once we get that buy signal, that is the signal. So let's talk about what's going on with Senator Cynthia Lummis. So she says, today I'm introducing the Responsible Financial Innovation Act alongside Senator Gillibrand, I don't know her name. The United States is the global financial leader, and it's absolutely critical. The U.S. plays a leading role in this new frontier. And by the way, if I seem a little bit out of it today, guys, I had to actually give some blood this morning. And I didn't eat anything, so I am feeling a little bit kind of like, I don't know, I'm drained of my blood today, guys. I had to do some tests for some stuff. So that's kind of why, I'm a little out of it today. But ultimately, I'm going to break it down for you, and then I'm going to play the clip for you. That's why today's video is so long. So if you want to watch it, I'll do that afterwards. If you don't care to watch it, it's 13 minutes. I'm just going to break down the key points. So essentially, they unveiled the bipartisan bill. So it's a 60-page draft bill that contains provisions aiming to settle the most consequential questions currently hanging over the crypto industry, including setting a clear line between crypto securities and commodities. If enacted, this aspect of the bill would generally be considered a notable win by the industry, which has openly favored the CFTC over the SEC due to the latter's aggressive posturing toward industry stakeholders and its failure to provide any regulatory clarity concerning the legal nature of digital assets. The bill also seeks to liberate crypto payments for goods and services not exceeding $100 from capital gains tax. So that's pretty cool. You can spend up to $100 as long as it's direct crypto to crypto. You're not converting it, right? Which is interesting because the original version, it was supposed to be $600. They dropped it by $500. I don't know who was pushing that on the back end, but inevitably, that's what they're looking to do. And the bill further clears up a definition of what a crypto broker is, essentially to protect wallet providers, software developers, miners, and validate validators from being ensnared by cumbersome tax reporting requirements. More notably, the Responsible Financial Innovation Act sets a high and clear standard for stablecoins, allowing depository institutions like banks to issue them, and it will require 100% asset backing for all stable crypto assets, which that's how it should be anyway. So this is really, really cool. This could open the door to essentially have institutions, have banks, start dealing in cryptos alone, start dealing in stablecoin tokens, maybe something like USDC or something of that nature. But according to them, it would have to be backed one-to-one in their reserves. But really what this is doing is opening doors to that regulation, which I know a lot of people aren't, they don't want regulation, or they're scared of it, because crypto is supposed to be like censorship resistance and borderless and all that stuff. But, if you truly want to adopt Bitcoin and, stable coins specifically, and things like Ethereum, which, by the way, the bill also says are commodities and should be treated like commodities, specifically Bitcoin and Ether, then this is really what we need. This is essentially a very, very big win. So we do need to see how this progresses. Obviously, you don't want to jump the gun and get too excited too soon. But if you guys do want to watch the actual interview, I'm going to play it for you guys super quick. So if you don't want to watch the interview, then skip it. But if not, this is the whole thing.
Bipartisan team of senators revealing details of some long-awaited cryptocurrency legislation. This legislation is called the Responsible Financial Innovation Act, and it comes courtesy of Wyoming Republican Cynthia Lummis and New York Democrat Kirsten Gillibrand. Both senators join us right now, first on Squawk Box. And ladies, welcome. It is great to see both of you because there's so much anticipation about what this could mean. First of all, I'll ask you, Senator Lummis, how this kind of came about that you two are working together and how much support you found from your colleagues on this.
Well, we put out early drafts of this bill in December, so it's been a long time coming. And when Senator Gillibrand joined in, her contributions to this bill have been significant and important. We've put out several iterations for comments. We've had multiple meetings with regulators, with the regulated industry, and a lot of stakeholders. We wanted to take our time to put the best draft that we could assemble onto the table. We think we're there. Today's the day.
Senator Gillibrand, let's break it down for people who haven't seen the details yet. I think the most important part is that it declares that things like Bitcoin and Ether are commodities, and so they would be regulated by the CFTC. A lot of other things would be considered equities to be regulated by the SEC. How did you come about with kind of deciding this? How much squabbling is there? Because there has been some interregulatory kind of dispute about who should be able to regulate this between the CFTC and the SEC.
The most important goal of this legislation was to create safety and soundness, to create consumer protections, transparency, accountability, and certainty. When we met with industry leaders, they basically said, we just need to know what the rules of the road are. We've been seeking regulation from various regulators, and the delays in response have been unconscionable. And so what we did was common sense. We used existing definitions. If you're a security, you're going to pass the Howey test, which is the securities definition. And for CFTC, we already had the futures market, so we added the spot market for cryptocurrencies. And we look at each digital asset's purpose. And based on the purpose, we've aligned the regulatory framework around that purpose.
Already, though, there's squabbling that's continued, that's going back and forth. People saying, look, how can you regulate a decentralized effort to begin with? And by the way, aren't there conditions where some of these things would be considered equities and should be regulated by the SEC? You're right. This has taken a really long time. And the industry is kind of pushing back, and others are, too, jumping in on this. I guess that gets me back to that original question, Senator Gillibrand. How much support do you have? Do you think that this is something that the Senate will get behind?
I do, and I think this is just day one, and our goal is to make sure this goes through the 4 committees of jurisdiction. It takes a long time to build a regulatory framework for a new industry. And we expect this to go through the Banking Committee, which Cynthia is on. It'll go through the Agriculture Committee, which I'm on. It will go through Intelligence, and it'll go through Financial Services. These committees will have pieces of the bill because they only regulate parts of this industry. And regulation is necessary. You need to make sure that you have consumer protections. You need basic rules of the road, and that's what this legislation provides. We think there's going to be a lot of momentum behind this bill, having met with most of the industry stakeholders and the experts in this field, and we're just going to work with them over time to continue to improve the bill.
Who have you talked to, Senator Lummis, in terms of the leadership? Are they on board with this? I know you've reached out to both the left and the right. Where do you think your biggest support is coming from?
We have found very receptive people on both sides of the aisle. We've met with the leaders of the Finance Committee. As Senator Gillibrand mentioned, there will be 4 committees involved in this bill. So we'll want to go through and sort out how the bill can be divided among the committees, and then continue to meet with all of their members, not just the chairs, but all of their members. The fact that we're on several of these committees helps. We've met with the chairs and ranking members of all of the committees of jurisdiction. They know we're working on it. They know our approach. They know that we're trying to just fit the digital asset world into our current regulatory framework and have a general overview of how we're going about it. So we've had dinners, we've had breakfast, we've had briefings, we've had meetings, we've brought in speakers, we've gone to meet with them individually. Our staffs have met with their staffs. This has been a lengthy effort on our part to not only brief our colleagues, but also collect information from the stakeholders.
Hey, Senators, 2 questions for you. One is, and I'm sure you saw this a little over a month ago, Fidelity, the largest 401k manager in the country, announced that they were going to offer Bitcoin to users or to consumers. Companies have to choose to allow their employees to put Bitcoin in their 401ks. The Labor Department came out and said this is a terrible idea. What do you think?
I think the Labor Department's wrong. I think it's a wonderful idea. It should be part of a diversified asset allocation, and it should be on the end of the spectrum of a store of value. Obviously, if you have a fully diversified asset allocation, you have some assets that you want to produce income in the short run. You also want some assets that are just a store of value. And I think that's where Bitcoin really shines. I think it's some of the hardest money that's ever been created in the world. And for that reason, it belongs as a slice of a diversified asset allocation for retirement funds.
Senator Gillibrand, you agree, disagree?
No, I agree. And that's why this piece of legislation is so important and why it's so timely. Once you create basic infrastructure around these types of digital assets, where there are disclosure requirements, where they have a regulator, where there's full transparency, that is going to create the safety and soundness in the market that will give other people comfort that this is a market that is here to stay. It's one that is properly regulated and one that has oversight and accountability. And that's what this legislation is going to do. So while many people are uncomfortable with where these digital assets are being used or offered today, once a regulatory framework's put around it, there will be more comfort there.
Senators, and then I was going to ask you a philosophical question. Considering you're dealing with the SEC and the CFTC, there has long been chatter about whether these 2 agencies should actually be one, that there's too much competition between them. There's too much infighting about who's going to take this and who's going to regulate that and how they're going to do it in different approaches. Some people think the competition is good. Some people think the competition is terrible. What do you think?
I think it's our job as Congress members to create the laws and they implement the laws. And they should not be fighting over jurisdiction. That is why Cynthia and I work so hard to make thoughtful decisions about what part of these digital assets go to each regulator. Each regulator has expertise that is unique. It's important that the CFTC continue to review and have oversight over commodities. They're going to need more resources when this industry goes to them, which is why we have a revenue stream going into the CFTC specifically so that they can hire more experts, more cybersecurity personnel, and more lawyers. It's important that they have the resources to do the work we are giving them to do. But the distinct responsibilities of the SEC and CFTC are significant, and so they have to continue to focus on their areas of expertise and allow these markets to flourish.
And we spent a lot of time on the definition of the modern Howey test. In fact, we looked at every single circuit court decision that has ever referenced the Howey test to make sure that our current definition is sufficiently modern and updated so that it's going to be fairly clear between the CFTC and the SEC about which assets fall into which regulatory regime.
But Senator Lummis, the SEC chairman, has been very clear that he would like to regulate a lot of these things. Has he made any comment on this about kind of losing out on things like Bitcoin and Ether?
You know, we continue to meet with the regulators. I think you met with him yesterday. I'm meeting with him today, and we're going to continue to work with both the CFTC and the SEC to make sure that we both have found the right mix of using the Howey test to sort out which of those agencies best can regulate.
So it's
we think that because we're using the Howey test, it's going to come out just fine.
It just sounds like there's still some
ultimately,
massaging taking place.
This is day one, and I think this is not the day of the vote on the bill. That will be day 100. Day one is you introduce the ideas so that the people who have responsibility to write these laws have a chance to look at it, learn about it. We can have a lot of roundtables and hearings about it, and we can mark up these bills. So each one will be taken their part that's their jurisdiction, and they will create their own oversight. That will happen over the weeks and months to come. And it is our job fundamentally for Congress to write these laws and the regulators to implement them. They don't decide what they get to keep and what they don't. We have to write that rule for them, which we're going to do. And over time, this market will become more and more stable and more transparent and have the kind of safety and soundness that we expect in the United States.
My guess is you're going to face some pretty significant lobbying from a lot of different parties over the next 100 days or so while you do this. Senator Gillibrand, let me ask you, your state, lawmakers in your state, New York, last week passed a law that will halt permits for new cryptocurrency mining facilities because of concerns about the environment. What do you think about that?
So I think that is an oversimplification of the issue, and I think there was just an urgency to protect specifically our pristine resources like the Finger Lakes, because clean water is essential for many industries in New York, such as farming, such as our drinking water, such as tourism. And so that was specific to one particular miner that the entire advocacy came around. I think long term, there will be places that are appropriate for Bitcoin mining and places that are not, but each state can figure that out. My view is I'm trying to create the regulatory framework for these digital assets with existing infrastructure and let states make other decisions about what they want. We also have a New York regulator who's been issuing bit licenses for a while. But that regulator is kind of doing all the work right now, and she would love to have some federal oversight as well.
Yeah. Senators Gillibrand and Lummis, we want to thank you for your time, and thanks for your efforts on this. It's something the markets have been awaiting, so we will continue and watch and see where things shake out from here. Thank you.
So congratulations if you actually made it all the way through that to the end of the video. I just wanted to put that in there for you. The key points we went over, but that was essentially the breaking news this morning over on Squawk Box. And over here, we have Wild, the official website of the US Fed, now has a page with the ratio of eggs to Bitcoin. What is the purpose of this? I think that, so some people are speculating that they did this to prove the volatility of Bitcoin and how, you know, you can't price things in Bitcoin because the price goes all over the place. But, you know, at the same time, it obviously does show the purchasing power of Bitcoin has increased pretty good over the time, right? So that is it for me, guys. Thank you so much for coming back to the channel. You guys rock. You're the reason that I make these videos. Have a wonderful, wonderful day. We will keep our eyes very, very close on these charts. And, you know, we are still stuck in this range. So, you know, if I even extend this out here a little bit farther, even though technically it doesn't really make sense to extend it that far. But ultimately, guys, this is the range that we're still in. We're still just bouncing around. So, you know, 28,600, this is the bottom. this would be the area to be putting in longs, essentially, if you want to play that. And then the shorts, yeah, I mean, now are up here at around 31.8. And until we break out of this range, it's nothing but just sideways chop, you know, fake out to the upside, fake out to the downside. We need to figure out what direction we're going. And that's about it. That's about all we got today, guys. So thank you for coming back to the channel. You guys rock. You're the reason that I make these videos. My name's K-Dub. This is Crypto Zombie. Make sure that you check out these videos popping up right here, right now. Until next time, stay crypto. And of course, peace out.